you want to answer that? Because you're pretty bullish these names.
Yeah. Well, one, all of them are linked to the importance of AI, and as the tentacles in AI grows, they all benefit. I think a lot of the progress in AI is invisible at the moment. That's why markets are kind of questioning things like what Microsoft reported. But I think that those invisible gains then lead to productivity. But it's at the same breath, this year, I think the market is broadening because we've seen a lot of other trades work besides the Mag 7, and it's not a bad thing. I mean, that to me is not late cycle. A broadening of the market is as a mid-cycle phenomenon, right? Because basic materials are doing well, small caps are doing well, a lot of industrials and healthcare. So that's a sign of a broader market, which is the other 493.
It's a sign, I guess, Professor, of what some would describe as a run-it-hot economy. That is a run-it-hot stock market, and all those cyclical areas are the ones that would do well. Now, normally after we would get a few of the mega cap earnings reports, I would ask you, well, what did we learn about the mega cap stocks this week? But I don't think we learned anything, because I think the group shouldn't be discussed anymore as a group. And we learned whatever we did about Microsoft, and we learned something different about Meta, and thus the stocks reacted differently.
I've never seen, the Mag 7 react so differently. They usually just go together, and we think of them as a group. But continuing on what Tom said, I mean, really only 15 to 20% of firms have really even begun to use the potential of AI. And I mean, those are the ones that I think really have a great opportunity to really raise their profits. And we might see layoffs, et cetera, and so on. But that's part of cost cutting in a technological boom. And that's why I think in some way they have the potential to outperform the Mag 7 this year. When you start out at 17, 18 times earnings, you don't need much above expectations at all to really have a good move with a profit increase.
Let's talk about earnings real quick before I let you go. We start out with the shrimp cocktail. The banks started out, and then we get the meat potatoes, and we're starting to get the entrees, like the companies that really, really matter. Estimates are high. We're exceeding them to this point. What's interesting to me is the price action has not necessarily matched the reporting. Reports good, price action not so much, even among those that have done well, Meta excluded.
Yeah, the numbers played out. If you compare this quarter versus last quarter, companies that are beating are rising a lot less. Basically 0.5% now, 5-day gain versus 2% last quarter. But the ones that missed were falling 5.5% last quarter. They're falling 3%. So the market is almost taking the edge off on earnings results. But I think you did point something out that's true. I think it's the first time ever that Meta and Microsoft had a divergent move. They've almost always moved directly on the same day, and one was down 11%, one was up 11%. Or I'm getting the numbers wrong, but
your point's well made.
That's like a 3 or 4 standard deviation divergence.
Professor, lastly to you, are you confident that earnings can live up to the hype? Because they really have to. It's where the growth, so to speak, in this market is going to come from. It's not really going to come from multiple expansion anymore. It has to come through earnings. What do you make of that?
Well, it certainly has to come through earnings for the Mag 7, but, I don't, the non-Mag 7 are still selling at 18, 19 forward earnings, and, I think that's extremely reasonable. Certainly, I mean, the outlook, listen, let's hope we got this government shutdown taken care of, a really good Fed pick out of the way. We have one little more speed bump to go. We need to know what SCOTUS says about tariffs. That's going to come, at the end of February. And after that, let AI do its work. I think the skies look clear for a really great year in 2026.
All right. We'll take your forecast for now.
I mean, the U.S. is pushing to be #1 over China. I spoke with Nvidia CEO Jensen Huang about it at the World Economic Forum last week. Watch what he said.
And we need to win the AI race at every single layer. We want to win the energy layer. We want to win the chip layer, the infrastructure layer, the AI model layer, and also the application layer, and continue to lead the technology around the world.
Jack, what do do you think about that, about this race with China? I mean, it was an AI race, but it's also become a power race. I mean, Beijing is pushing to ban American and also Israeli cybersecurity technology from being used in any Chinese companies. Do you believe that? What's your take on counteracting China?
Well, first of all, Jensen's absolutely correct. NVIDIA is one of our investors and one of our partners. And what Jensen talks about is AI for the physical world. That's what we're all talking about. And emerging from Davos, we have AI for the real world. And that's the kind of AI that we need to also beat China on. China right now has DeepSeek, has Alibaba, Qwen, has other models coming out that are in the large language model area. But now is our opportunity as the United States to really beat them where it counts, which is AI for the real world. And that's what Jensen talks about. On the cybersecurity issue, this is a critical function. One of the things emerging from Davos also is the theme of making sure we're ready for the quantum attacks. And China has a major program led by Pan Jianwei and others that are building the quantum computers that will attack it. In Davos, the founder of Ethereum talked about Q-Day is coming. And that means that Bitcoin, that Ethereum, that other cryptocurrencies are at risk. And it's time that we bolster them by moving them over to post-quantum cryptography. Because now is the critical moment to defend ourselves against the upcoming Chinese attack using quantum computers that will attack the financial system, the telco system, government files, as well as Bitcoin and cryptocurrencies.
That's incredible. So we'll really keep a focus on quantum. What do you think Elon Musk means when he says, oh, you know, AI is going to mean you're not going to have to work, robots are going to do everything? Can you explain what vision he's talking about?
Well, I'm very supportive of the vision of humanoid robots. I think we're going to see them much sooner than people realize. This is not a Jetsons future. This is coming now in the next 4 or 5 years. And when you look at Tesla, for example, people keep thinking Tesla is a car company. Tesla is not a car company. Tesla is a robotics automation company. In fact, they just announced this week that they're discontinuing 2 of their lines of models, and they're going to favor focus on their robotics division. And so my prediction is that Tesla will probably double in stock price over the next 3-4 years. And the reason is automation and robotics. When you look at humanoid robots, you know, look at them in warehouses and distribution, such as Amazon, Walmart, and others. You're going to see them adopting these kinds of robots. You're going to see hospitals adopt them. We talked about medical care. Hospitals right here in New York City have tens of thousands of workers, and we can use humanoid robots. But these are jobs that you can't really keep humans in. These are not the medical jobs. These are the low-skilled labor. And we need robots to bring in and deliver on these kinds of jobs as well.
Wow,
so I do think that companies like Tesla, like Figure.ai, which is a private company today, and many others, such as Eptronic and Agility, will be the future in terms of humanoid robots in the workplace.
Unbelievable. So everybody's going to have their own AI assistant?
Well, I definitely think we're going to have a software AI assistant.
That's an additional.
The big announcement with Google and Apple just this week was amazing. But I do think that we're also going to see humanoid robots initially, Marie, in the workplace and industry, not so much in consumer, but eventually in our homes as well.
Wow.